The US and China have reached a deal to slash tariffs in a relief for American retailers. This is Sectors Up Close, and we're talking retailers. That's one of the most vulnerable sectors to tariffs on China. The CEO of Walmart told President Trump in a recent meeting that its shelves would be empty if the 145% duties on China stayed in place. Before Monday's deal, consumer discretionary stocks were down 11.6% year to date. On Monday morning, those tariffs were slashed, down to 30% on Chinese imports to the US for an initial 90 days, and a relief rally has boosted the stocks of retailers like Walmart and Target. Brian Krawez is president of Scharf Investments. Brian, how big a relief is this?
I mean, certainly the tariffs before were an outright embargo at 145%. Even the administration had said that. So this is definitely a relief, but they're still pretty high. Even the UK deal was, an increase in tariffs. So for consumers generally, tariffs are still going to be a problem. But obviously, this is a much better situation than we were in just on Friday.
Do you think then that investors in consumer stocks should be nervous about the fact that this is only a 90-day pause for now?
Yeah, I mean, even, first of all, it's only a 90-day pause. Second of all, it's still too high. In our view, it's still going to be a problem. You still could have a recession. So, yeah, I think investors are happy today, but obviously, I think all investors are hoping that the tariff levels come down even more. Ultimately, no one wants to see a recession, and I think that's still very much a risk right now. So, yeah, I would be nervous still about what the future holds, but it's better today than it was on Friday.
We've seen a bounce in the US dollar today, despite the Trump administration having said they want to see it lower. Currency movements didn't seem to be part of this China deal, although there was speculation that they might be. Is this good news for American importers?
I mean, I think generally speaking, we've been saying that tariffs would reduce the trade deficit, and ultimately the trade deficit is linked to net foreign investment. So the problem with trying to get trade deficits to zero is that ultimately you're going to lead to capital flows out of the U.S., which means a lower U.S. dollar, which actually could be inflationary for U.S. consumers. So the policy of the Trump administration to get rid of trade deficits is in and of itself bad for the dollar, and that probably hasn't changed today.
Consumer sentiment, as you said, has been very weak in recent readings. Should investors still be worried about the recession risk in the broader picture?
Oh, yes, very much so. I mean, some of the damage has already been done, but as I've already mentioned, tariffs of 30, 39% on China are still above where they were. UK deal was above where they were, and that's not even to mention all the other issues with cuts in budget and things like that. So, recession is definitely still a very likely outcome, given the path that we're currently on.
Are you still expecting tariffs at the rates we see now to have a significant impact on inflation?
They're certainly better than they were before, and this is still kind of breaking news, but yeah, we'd say that tariffs at the level they are going to be inflationary for a couple of reasons, but one of which is obviously that prices are going up from imports, but also you've got the effect on the dollar as well. So yeah, I would expect there's some inflation impact still to come, even from lower tariffs, and that obviously will be problematic for the economy.
Are there any consumer stocks that you think are well placed to weather this?
I mean, we like more staples, like a Heineken with a lot of sales outside of the U.S., say a Hershey, which is an item that might get affected by tariffs, but can easily trade down into it. It's a cheaper product. In terms of the straight discretionaries, like say autos or things like that, we think those would be the things you'd want to avoid.
That was Brian Krawez of Scharf Investments. Don't forget, you can watch more videos on Reuters.com.